Hi, this is Zak Mir from Master Investor with a bumper edition of Bulletin Board Hero Stocks on Tuesday, the 24th of March. And I'm starting off with Boxhill Technologies, which I haven't looked at here before. Looks like a decent basing here below this 0.1 pence level. That was a July-August support, so we've bear trapped from below that over February and March and breaking higher. The chart reminds me quite a lot of the Sefton Resources chart, although that's slightly higher now in relative terms. Initial target back up to 0.2 pence, which would be the post-October resistance. Be cautious on the shares, maybe wait for an end-of-day close above the 200-day moving average of 0.13 pence. But with this extended bullish divergence line here in the RSI window, it looks as though the shares are back in a 0.1 to 0.2 range reasonably comfortably. Churchill Mining's a stock which has probably been a difficult challenge for many sort of small cap traders over the recent past. But shares have been all over the place with the rally in September, the last big positive feature. Situation at the moment is that it looks like we're bumping along the bottom around the 10 pence level for January and earlier in March as support. Higher low this week above 10 pence is encouraging. We also have this uptrend line in the RSI window as well, which should provide extra momentum. End of day close above the 50-day average at 13 pence and above neutral 50 on the RSI scale to leave it at 55. Initial target back to 19 pence, which is the 200-day moving average, but a best case scenario over the next 1 to 2 months as high as this resistance line from October through 30 plus, obviously just testing the autumn's resistance. Couldn't resist going back to Frontera, a very well poised looking chart at the moment. The V-shaped bull flag yesterday. We got a golden cross buy signal between the 50-day and 200-day moving averages. There at 0.83 pence, double bounce above RSI 50 as well, adding momentum. So the obvious thing here would be for a retest, a partial or full retest of September resistance through towards 1.8 pence. Overall, a sort of U-shaped reversal here, which is very encouraging as well. At this stage, only back below, let's say, the 20-day moving average, 0.93 pence would be outright negative, or at least suggest that there's going to be a significant delay in the upside scenario. Another new stock to the Bulletin Board Heroes is Metal Tiger. Here we've got a mildly descending price channel from September. Bear trap below the 0.6 pence level for March and then a recovery. Probably all we need now is a couple of days close above the 50-day moving average. That's currently at 0.73 pence. If we can do that, then probably back towards the main 1 pence plus resistance over the course of April or May for these shares. Only back really below the 0.6 pence level now would be outright bearish for the shares. Another stock which is relatively new, but I haven't looked at before, is MX Oil. Here we've got something which is quite encouraging formation here in the sense that we had the break above the 50-day moving average. That's normally the key near-term trend breaker, downtrend breaker in this case for a stock or a market. A couple of decent support points above that now since the February breakthrough. And the view at the moment really is that especially while there's no end of day close back below the floor of this rising December price channel at 2 pence, we would be looking for 3 to 3.5 pence as the target at the December resistance line projection. That would also take the shares back to the initial support in July and resistance in October as well. So it seems to add up quite well in terms of a near-term recovery for the shares. Still a bit too early to go for the 5 pence initial peak, but encouraging nonetheless. Finishing off with a stock which might deliver a sigh of pain for some traders, Nostra Terra. Very tempting to sort of look away on any rallies for this stock because they don't tend to last too long, but impossible to ignore today because of the triangle breakout that we have, triangle from May last year. Break of this line here, also breaking the 50-day moving average at 0.16 pence as well. So that's an end of day close above that, which is significant. That's the first proper push above that line really since September or October. So significant there. Initial target 0.24, which is the 200-day moving average. That would be expected over the next 2 to 4 weeks. Stop loss probably back below this initial support for January, which was around the 0.13 level. So something to look out for there. But the March price action that we've seen has been a bear trap rebound from below that level. So points of encouragement there, if not the end of the recent downtrend in the stock. That's it from me. More updates at masterinvestor.co.uk.